All right, and welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So S&P 500 officially closing out the worst September since 2002. So that's 20 years ago. Also, the first time we've had 3 consecutive red quarters since 2009, and it was really capped by a huge dump in the final 10 minutes. If we look on the intraday here, you can see the huge dump. We basically went from about 360 on the spiders all the way down to 357, and really the dump was kind of across the board there, across all markets. Now, I think a lot of the last 10 minutes there, and really a lot of the action here on Friday, was some end of quarter window undressing. We also have quarterly OPEX that took place as well. And some of the reason I believe that is because that big dump that we saw here, there's the Russell in the corner. You can see, same thing there. That big dump, usually when big money is looking for, if they're selling with conviction, they're not going to wait until the last 10 minutes to do it. This to me really kind of seemed like a lot of it was window undressing and dressing, end of quarter OPEX related stuff. Still, all things considered, it was a nasty tape. We came down here, we kind of had like a micro kind of sloppy bear flag, and we started to push lower here on Friday. So anyway you slice or dice it, it's not a good look here for the markets, and just adds to an already poor year. We closed at new 52-week lows on the year. That said, I do think still we are pretty close to what I would call at least a technical bounce. So we are oversold on the daily time frame, and we did close below double bottom, so that is definitely a fact. But you got to look at what you're going into as well. So we have the 200-week moving average, which we closed basically right on Friday, and you also have this pivot here, previous all-time high, which we are also now into. So I think short term, in the immediate term, market can get a technical bounce here. We're oversold. There's a lot of we're starting to see panic start to creep in a little bit, especially with that close on Friday. They probably got a lot of retail traders to throw up their shares into that close. So I think there's a technical bounce coming, and that's all it really is. After that, we've had pretty good controlled selling all year long, but I think we'll probably go into the next part, which will be the panic phase. And that will be the real waterfall selling, and not the kind of, the kind of controlled sell-off that we've seen all year. But we'll see the VIX really spike. I mean, the VIX is elevated here. And by the way, another reason why I think the end of quarter, Friday's action was end of quarter stuff, is the VIX was red on Friday. So it's not like there was real panic out there. But regardless, the next phase here, and I've already got the dates worked out for when I think this will happen after a technical bounce. But we will get a panic phase, and you'll see selling with conviction, and there'll actually be fear in the market pretty soon. And it's a very quick event. It doesn't take long to happen, but it's vicious. So that's what I think we're up against right now. I do think we'll probably, like I said, get a technical bounce here. The market's pretty oversold here on the daily, and getting there on the weekly as well. And again, going into that 200-week moving average, as well as the 50-month moving average. Clean up those lines there, you can see it right there. Pretty good sell job right into that area. So I think we're close to a technical bounce. It may last, a week or so. That's really all I'm looking for. But for right now, got to be careful in this market. I mean, we've had a pretty vicious down year, and I think it's going to continue here moving forward. But anyway, slice to dice it, we had a new closing low and capped off the worst September since 2002. If you look at the triple Qs here, that is now through double bottom as well. So pretty much across the board, the Russell 2000 was really the only one that didn't make new lows here. And I kind of have a theory about this, is that a lot of these small caps have been so beaten down already, even Bitcoin and stuff like that. The growth names, Zoom, Roku, Carvana, a lot of these names of biotech, XBI, this has come so far down in the last 18 months or so that they're not making new lows now, because everybody who wanted to sell is already sold. Even look at a stock like Netflix, for instance. This is actually holding up okay, relatively speaking. But when you look at where it was back in last November, a year ago, it's $700 stock down to 175, in 6-7 months. So there's a lack of sell liquidity on some of these names that are so beaten down. And now it's Apple's turn, it's Tesla's turn, it's Microsoft's turn. So IWM not making new lows, it's really the only one. But my theory there is that the small caps and the big risk names have already had such a fall that there's not as much sell liquidity there for the downside. But anyways, let's move on over here to, let's get into some sectors. So SMH here, semiconductors, making a new 52-week low and closing low. So again, getting through double bottom this week. And you do have, this could be a reason for a technical bounce here. We do have a nice little falling wedge starting to build on the SMH. So that could break bull. Maybe you can get back up to the 200 handle, 203. If we have like a mini kind of squeeze or something. So that's something I'm watching there. But semiconductors, new 52-week closing low there. IGV did not take out the lows, but you do have a bear flag there building on the daily. So again, cloud software week, and this is a weekly breakdown. We talked about that last week. No way around that. That is a pretty solid weekly breakdown. So cloud also in a weak technical position as well. Dow transports here did not make new 52-week lows, but again, this has led to the downside. Last week, it made 52-week lows, and now this week, the market is making 52-week lows, and we know the Dow transports are a leading indicator, and again, kind of back-tested that 200 moving average on the weekly there this week, and got rejected there. So Dow transports also very, very weak chart here, all things considered. Interest rates, again, remain strong. So the 10-year actually almost cracked 4%, got all the way up to 3.992 there before backing off, but still in a strong technical position. The 30-year here as well got above 3.8. So that was a high of the week, was about 3.84. And so you can see, again, still deep inversions as the 30-year yield is less than the 10-year, and we've got deep inversions across the board. So again, this is something that will come back to haunt the economy down the road, and market is starting to come to that realization right now. All right, so let's get over to see, home builders are next. So XHB, again, that 54 level I told you about last week, that did end up holding. So we went down and tested that earlier this week, got a bounce, and then kind of retraced on Thursday, Friday. But that level is holding up for now. Eventually it will break, but this is, it's hanging in there for now. If we get a bounce, it might take you back up to 58 bucks. If we get a technical bounce in the market, like I was suggesting earlier, you could get up to that area. But if you put in the lower high, 54 will likely break to the downside. Same thing with ITB. So those levels there is 55 and then 51.50 on the downside. VNQ, real estate, this thing took a huge dump this week. We have a head and shoulder pattern right here, and that actually played out to my target on Thursday. So that got down to 78.73. I had a target of about 79.80 bucks there. That did get satisfied. So this may be one that, and this is way oversold, by the way, wicked oversold on the daily. So this is one that may have a little bit less downside on an incoming leg down in the market, because this one's already so beaten down. But that did reach my target there, and a pretty dramatic fall there for BNQ. XLF here, so financials also into double bottom. They did hold double bottom by the end of the week though, so XLF did hold that. If that breaks on a weekly close though, this is going to head right back to that 28.75 area. You've got a pivot low there. So that's going to be your next logical area of support. But XLF getting hit just with just like everything else. Broker dealers, same kind of thing, bear flagging on the daily. And by the way, speaking of financials here, this is how you know that there's problems. So Credit Suisse came out on Friday and they said, basically just unsolicited talk, said like, hey, we have no problems with our balance sheet, everything's fine. And anytime somebody says that, especially when it's not solicited, there's problems with their balance sheet. And by the way, look at a chart of this thing. I mean, this has been an absolute dog of dogs here. This is, when you look at where the S&P was in 2009 and what it's done since then, and where Credit Suisse is, this is a dog if there ever was one. So this chart is indicating problems, and it's amusing to me that they came out and said that. It's almost always what happens before some type of a blow up or credit problem. But Credit Suisse getting smashed along with everything else, making fresh 52-week lows this week as well. On to energy here. So let's talk about crude first. So nice little pop this week off the lows in crude, and we're starting to retrace just a little bit. I'm not convinced this is put in the bottom yet. You did have a weekly doji, and a lot of the times the doji, they defended the 100 moving average, and a lot of times when you get a doji after a good downtrend, it usually kind of precedes a reversal. So we have to see follow through, but I'm not necessarily convinced. I would really prefer it much more if we got down to that trend line. So to flip back to the weekly there, that is going back to 2021 in March. I really like this trend line. I would love for us to get down there. I will be adding to my crude oil position if we get down there. If not, we could still put in, there's a chance we could put in kind of a, we have a good green bar here. We could bull flag and then push up. So there's really two scenarios here that I can see. If the market does have kind of a panic dump, there is a chance that oil could sell off as well at first. So keep that on your radar. But crude having a decent week, all things considered, it was green, and they defended that 100-week moving average. So we'll just leave it at that for now. XLE, again, showing a little bit of relative strength this week as it was green in a market that got punished. But you still got to close above 72.90 here. So this red bar high, we have not done that yet. If we do, we can get up to that gap fill there. But for right now, really needed to get above that level. Otherwise, it could be just bearish chop here on the daily time frame. XOP, on the other hand, a little bit stronger. So oil and gas exploration showing a little bit more strength as we have gotten above that gap down high. So XOP could decide to flag here and push back up to that 133, 135 area here on the daily time frame. And then we have the OIH oil services looking a little bit more like the XLE, where you haven't gotten above that level yet. So again, same kind of pattern here across the board, but and then again, if you do get above that, your upside would be to about 225 around that gap fill area there on the OIH. Sorry, so nat gas here. I made note of this the other day. We're starting to put in kind of a little pennant here. So you have the sharp move down, and then you're starting to consolidate here inside of this little wedge. So if that continues to do so, this can break to the downside. And if it does, your target would be about 550. I think that would be a huge level of support for nat gas. I'd be interested in buying it myself there. So that's what I'm looking for right now, but you are starting to consolidate just a little bit bearish there on the daily. So that is something we'll be keeping an eye on moving forward. All right, dollar index here. So got up to that. I told you guys that 114 area would probably be a speed bump level, and we got there, and we've had a little bit of a pullback. So so far so good on that 114 level. Support on the downside about 110.75. We'll see how it reacts there. If it gets through that, you could get back down to 109 and change. You have this upsloping trend line which coincides with the 50 moving average. That is held for quite a while. And if that holds, this can get up to 120, especially if there's panic. So that's really kind of what I'm looking at right there on the dollar. But again, dollar still holding up, had a nice pullback there. And that could be a little bit of a tailwind here for the market. But we'll see what we get. I mean, it wasn't on Friday. Again, like I said, I expect a lot of that action Friday was end of quarter OPEX stuff. But anyways, gold here, it actually hung in there okay. Had a green week. And it wasn't victim to the selling on Friday. So maybe it was a little bit of a safe haven play there. The fact that it was basically flat on Friday with gold. At this point, I'm expecting probably if we get the panic sell that I'm looking for, and I'm pretty sure we do in the market, I think we'll likely get a panic sell in gold at first, and it will probably bottom first. It will bottom first, and that will be a major buying opportunity for gold. It could start the next leg of a very a cyclical bull market. I'll go as far to say that. But we could get a panic dump. And in fact, I'm kind of expecting it at this point. So that's just kind of my outlook on gold here. I've already got buy levels worked out on that. But for this week specifically, gold hung in there okay. And GDX actually, I think we talked about this falling wedge last week. We had a fake breakdown and it ended up working out. So now we closed above that. So miners are behaving well. And GDX this week, went from closing price of 22.44 to 24.12. So a $2 move in GDX and engulfing reversal on the weekly. And when you look at the spiders, that's a pretty good sell-off week this week. So totally opposite direction there for gold miners, and we're seeing some money flow right now. which is something I've been telling you guys for a couple weeks now. But anyways, let's move on to silver. Nice rebound here. I don't like what it did last week with that close. Actually, it was Monday rather. I don't like that close below that daily inside bar, but you had a nice rebound. We'll look for pattern here, but I think silver is in decent shape right now, all things considered. Same thing with platinum. You did put in a higher low. We'll have to wait on pattern for this one, but I do still like the level on platinum for right now. And then palladium here also kind of just chopping in this range, so nothing really too new going on there. And then copper, nice little move off the lows. So they did defend that 330 area on a weekly close. So again, this green bar low here at 331, that got defended on a weekly close, so we'll give it the benefit of the doubt for now. You are kind of stuck in kind of this channel, so we'll see what happens there. Again, copper is also something that can roll over in a panic, kind of, especially if there's like recession fears or something like that. You could make a case that you have kind of a move down and then kind of like a bear, kind of sloppy kind of bear flag pattern there. So that is a possibility, so be on the lookout for that as well. But at least for this week, it did get defended and it's hanging in there okay. All right, then lastly over to Bitcoin here. So Bitcoin just kind of been stuck in a range for the last couple of weeks, but I told members this yesterday. We're at kind of an inflection point here. So we have this big trend line, and I've been telling you guys we have this weekly consolidation as well, which is bearish inside bar on the weekly. 20 moving average below all the other moving averages. But now you're coming into this trend line. So it's do or die time, really. So if you get above that, that would probably give you upside, maybe even to 22, 23,000, somewhere in that area. But if it gets rejected, this can go a lot lower. So be aware of that. Could flush to 13,000, 12,000, somewhere in that range. That would take you down to basically the 2020 breakout. I don't think this particular Bitcoin chart doesn't go that far back, but you can see it for yourself. There's a good support area there around 12, 13,000. But again, big picture, that trend line, that's what I'm watching this week, because we're getting very close to it. And it's going to, it's already basically touched yesterday. So it's really decision time here for Bitcoin coming up soon. Anyways, let's get back to the spiders here. So big picture, we could get a technical bounce this week. In fact, I'm expecting one at this point, but it's not going to be a major bounce. It's not going to be anything like this move or the move in March. It'll be much more short-lived, but it could be robust. We could get a move like this where we had 230 points on the S&P 500 in 4 or 5 days. So it could be something, a short rip your face off rally, but I do not think it lasts very long, and then I think we get into what I would call a panic phase. Anyways, guys, I'm gonna wrap it up here. You guys take care. Come find Jason on Patreon. Find me on carnivoretrades.com. I'll talk to you all next week.